Are you looking to get started with Bitcoin but don't know how? Especially with all the excitement in the crypto market right now, with Bitcoin hitting all-time highs. It's a very exciting time. And many people who have been reluctant to this point now are very interested in learning, well, what do I do and how do I get in? And it can be very intimidating because there's so much techie talk about it. So in this Bitcoin Basics series, I'm trying to demystify how you get started and how you do the basics in crypto. So today we're going to talk about how do you start? Well, starting is pretty simple. And the first thing you need to decide, and again, this is not financial advice, this is education only, is that you need to determine if you're going to invest, how much are you willing to invest? Now, for many people, when they look at their entire investment portfolio, they usually allocate a small percentage to cryptocurrency. This usually looks like anywhere between 2% and 5%, depending how big their portfolio is. And for some people starting out, they don't really have a portfolio. They just maybe have a little bit of money to invest, and that's fine as well. So how much should you invest? Well, the simple answer in this kind of investment, because right now Bitcoin and all of these cryptos are still considered speculative, meaning they're long shots. But we've seen great performance, so people are excited. So that begs the question, how much should you invest? Well, simple answer, don't invest more than you can afford to lose. Okay, this is especially important for this kind of wild, volatile investment, where we can see Bitcoin be 80,000 one day and 60,000 another, right? So you need to have a strong stomach as things go up and down very quickly day to day in the Bitcoin world. Some people have estimated or compared Bitcoin to stock market and said, well, the stock market moves at a certain speed and the crypto market moves at like 5 times that speed. So what would normally take a month and Bitcoin and crypto could take a week or less. So things move much more rapidly. So once you decide that amount of money, let's say it's $500, you can afford to lose $500 with a promise, or with the opportunity, I should say, that you could make that double or triple, or even in some coins, 5 or 10 times your initial investment. In fact, to be clear, some people in crypto have taken that investment and made 100 times. Now, that's not a daily occurrence, and that won't happen with Bitcoin. But some of the other altcoins or alternatives to Bitcoin, that can happen. So it's a very exciting area. But the next question is, what should you invest in? So if you have $500, what should you do with it? Well, a good idea is to spread your risk among a few coins or a few cryptocurrencies. So Bitcoin is always a good choice. It's very stable in comparison to the others. So you could allocate a small amount, let's say $100 to Bitcoin. Then we have a group of other cryptocurrencies that have a lot of value, have a lot of market capitalization, meaning a lot of money within its own coin ecosystem. So these are coins like Ethereum and Solana. Those are well known in that space in large cap. So you may want to invest a little bit in that. So for example, you might say, I want to invest another $200 because the opportunity in the large cap is a little bit more. So $200 in Solana. Great. So what do you do then with the remaining $200 for your investment? You've invested $300, 100 in Bitcoin, 200 in a large cap like Solana, and then you can decide what to buy in the mid or the small caps. And if you're just getting going, I recommend probably sticking to some of the more well-known cryptos. So staying in the mid caps and not necessarily going into some of the more extreme projects that are just starting out that could make 10 or 100 times value, but it could go to zero, and many times they go to zero. So the mid-cap coins then are the ones that are the next largest group. And these are products or coins like XRP and ADA, which is also known as Cardano, and others. So I have another video that talks about small, medium, and large cap coins if you want to understand more about that. But the idea is to spread your risk among something that's very big and stable, something that's large, and then something that's medium size. So this gives you exposure to 3 different cryptos with $500. That sounds great, but then how do you do it? So the easiest way to get started is with what's called a centralized exchange. So these are online sites, basically websites, where it looks a bit like an online banking site where you deposit or withdraw your currency. So this could be like US dollars or euros or some other currency. And Coinbase is one of the well-known ones. Another one is Kraken. They all have pros and cons, so I'm not actually recommending any of them in particular, but these are crypto exchanges that have existed for many, many years, in some cases 10 years. So they're well established, and they can be generally trusted to try to help you if there's a problem. But again, this is not encouraging you to use any specific exchange. But let's say you go to Kraken. And then at Kraken, you set up a new account, and they'll ask for your information, and then you deposit your cash. Now, they will ask you for your name, your address, your ID, all of this, because they're actually in the money exchanging business. That means they're trying to exchange dollars or euros for cryptos. So they have to, by law in each country, know who you are, okay? In the world of crypto, having your identity is not important, but in this exchange phase, it's required by the US government, by European Union, and many others. So you would deposit money into that account, and you would deposit it normally. You would deposit through a wire transfer or through a bank transfer, whatever's available in your country. And that usually takes a few days to arrive. So once that arrives, then you have $500 worth of your currency. In this case, we're talking dollars. And then you want to use that to acquire the cryptos that you care about, right? And in my example, we're looking at some Bitcoin, some Solana, and some Cardano. So how do you do that? Well, it's pretty simple. You go to that exchange and you say, I want to buy $100 worth of Bitcoin. And you click some buttons, and all of a sudden the Bitcoin appears in your account, okay? The same goes with the other currencies. So the mechanics of it is not really difficult. And if the price of those coins go up, then you can then go back and say, well, now I want to sell it. And let's say they double in price. So you can then sell the coins, and then you'll have $1,000, right? So that's a nice way that you can double your money from 500 to 1,000 if that were to occur. So the beauty of that is that the centralized exchange holds it, manages it. They take your dollars, they exchange it for cryptos, exchange it back for dollars, and then you can take it out whenever you want. So that's the simple way to think about it and to do it. I have other videos where I talk about being your own bank and also securing your cryptos so that you're not taking risk with keeping your cryptos at one of these exchanges. And the reason why that's going to be important, and as part of this basic series, is that crypto exchanges, as convenient as they are, have been known to have problems. So people who keep their cryptos there long term take the risk of losing them, because these are not banks that are backed up by the federal government. Usually in most countries, they have some amount of insurance. This is not typically the case with exchanges. They're simply providing a service to provide buyers and sellers a market of people who want to buy cryptos with currency and those who want to sell cryptos for currency. Okay, so they're bringing people together like any market. But you're trusting them to hold your cryptos. And there are hacks that occur sometimes, and people could steal them. Okay, so the best thing to do will be to eventually take control of those cryptos if you're going to hold them for any length of time. If you're just going to trade them quickly, a few days or a few weeks, maybe it's okay to leave it on the exchange. And many traders, they have to leave some money on an exchange if you're trading frequently. But if you're an investor, it makes much better sense to take full control. So again, take a look at my other video on non-custodial wallets, and you'll understand sort of that next step. But again, to recap, what does it take? You need to decide what you're going to invest, open an exchange account, transfer your cash there, and then from there, you can choose from whatever cryptos the exchange is offering for their customers. And each exchange will have a different set of cryptos that they offer. So you can then exchange it for crypto and then eventually exchange it back when you want to take profit. I'm Mark from the Bitcoin Tutor. I hope this was helpful for you. If you'd like more information, take a look at the other videos on this YouTube channel, and also come visit us at thebitcointutor.com. We're here to help. Thanks.